Hey, what's going on everyone? PK Investing here. I'm sure by now you've all heard about Apple's upcoming stock split, so I figured I'd throw together a little educational piece about what stock splits are. Now without further ado, let's get into it. On Thursday, July 30th, Apple announced that its board had approved a 4-for-1 split, which would be completed by the end of August. When I first started investing, splits always confused me because of the terminology and the phrasing. It's a simple idea to grasp, but it might be harder for a new investor, so I've put together a little visual to make it easier to understand. So we know that Apple declared a 4-for-1 split. To make it easier for yourself to understand, think about it this way. An investor will get 4 shares for every 1 share. I don't know if it's just me, but reading it to myself that way makes it much easier to comprehend. Now, let's talk more about what the market implications of a split would be. To do that, let's think about it like a pizza. If you have a whole pizza and you slice it up into 8 or even 12 slices, you'll still have a whole pizza. But now if someone grabs a slice, they'll only get an 1/8 or a 1/12 of the entire pizza. The same is true for this Apple split. Apple is taking each stock, or each pizza, and slicing it up into 4 pieces, or 4 slices. The value of Apple's market cap, or the value of all its shares combined, is still going to be the same. But now, the stock is more affordable on a per share basis. And that leads me to my next point, which is why Apple declared a split. Before the split, each share of Apple was trading at over $400. For a hotshot millionaire, $400 a share isn't too bad, but for the average investor, $400 is a significant chunk of cash. Of course, with the increasing popularity of fractional shares, the price of one individual share doesn't matter too much. But we often seem to forget that fractional shares are only really widespread in the United States. Many other countries still only have the ability to invest in whole shares. Someone in another country wouldn't be able to invest in Apple until they could afford to shell out over $400 per share. But here in the United States, I can buy $1 worth of Apple every day and not pay a single fee. How's that saying go? An apple a day keeps the doctor away? Well, in this case, $1 in Apple a day keeps the job away. Apple split would bring the price per share down to around $100. And while that's still a lot of money, it's definitely more affordable than $400 per share. This increased liquidity is what Apple is trying to achieve. They think that the reduced price per share will look more appealing to investors and encourage more people to invest in their company. Let me know what you guys think about the split. Do you think Apple's share price is going to break 500 before the split? Or do you think there is going to be a spike after the split? Only time will tell. Until then, take care, and I hope to speak with you again soon. I'm not a financial advisor. Investing always involves risk. This video was created for entertainment purposes only.